What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to do very important weekly technical analysis because we are getting some major breakthrough on the weekly charts. First up, let's take a look at the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Also, there's going to be an incredibly important members only video being posted in the Stocks channel Discord today. So if you are not in the Discord server, I think now is the best time to be a Discord member because you are going to get an insane amount of value out of your membership. Alright, so the first thing I want to look at on this weekly chart is do keep in mind every candlestick is one entire week's worth of price action. And this week we did get the bullish breakout close above SPX 4040. Which did break the downward trending channel, and we also did close the week above the weekly 20 simple moving average. Now the critical higher high breakout that we need on SPX will be that weekly close above 4158, but when we get to the NDX, you're going to see that the tech sector is leading the way, and when the tech sector is leading the way, you are usually going to get a bull run. The tech sector will typically lead the way lower, which we did get. The tech sector will typically bottom first, which we did see, and the tech sector will usually lead the next bull rally, which we are currently seeing. So while SPX did not get the weekly higher high, we did get the weekly higher high in the NDX, which we are going to go over that chart next. So this bullish breakout on the SPX is incredibly important because this was the critical resistance we needed to break at 4040 because we did have 3 resistance levels that were at that level that we needed to break. We had the upward trending resistance channel that we needed to break at that level. We had the downward support channel that we broke down below that was also going to be newfound resistance. And we also had the downtrending resistance trend line at that same exact level. So not only did we close above that critical resistance, we blasted right through it like it was not even there and then continued to go higher and close above the weekly 20 simple moving average. So when you look at price action, you cannot get a weekly candle too much more bullish than this because we are starting to see a weekly trend of higher lows and higher highs. And now we're starting to see the price action slicing through resistance, which tells us there are some big money buyers stepping in and there are just no sellers left in sight. This candle is completely different than these large green candles that we had in the past because I know a lot of people are going to try to draw parallels saying this is just another bull trap bear market relief rally. But the only difference is that we now have the market structure to support a bull trend because we did get the higher low before we got the push higher. You can see every other time we had these very green candles, it was always coming from a lower low, and that is not a bull market structure. A bull market structure needs higher lows, and just because we were getting these very strong thrusts higher did not mean they were bullish, because every time we went to put in the higher low, we just formed another lower low. This time is completely different because we are forming higher lows and higher highs, and you need to understand the difference. So while we cannot guarantee that we will not form a lower low and go hit 3,500, it is definitely looking less likely now that we have the bullish market structure. Remember, I'm not trying to say that I can guarantee anything in the stock market. I am simply trying to tell you this is a very bullish looking chart. A lot of people doubted the fact that I said this was going to be a very bullish week, and you can see that the chart did not lie to us because we did get a very bullish week. And just to reiterate, it is not about being right or wrong, it is about reading the chart and trying to understand what is the highest odds. And right now, there is still the highest odds that we are going to continue to push higher. That doesn't mean we won't get any pullbacks, but that does mean the pullbacks should be shallow. So I'm only looking for anywhere between 1 to 3% pullbacks before we continue to see the dip getting bought up and continuing to push higher. So for that reason, any pullback is a buying opportunity as long as SPX is above 4040, because that is the way I view this chart. It is still a bull structure, which means people should be buying the dip above critical risk. If we lose critical support, you always know you can manage your risk accordingly, but for the time being, this is a very bullish setup, and it does look like SPX does want to push higher. So there's really not too much else to go over. I'm going to get into a lot more detail in the members video, and I'm going to give a lot more scenarios that take us out to year end, and I'm going to show you exactly where I think the stock market is going, and I'm going to give some very compelling evidence of why I believe that. On the bear bull survey, you can see that we just have way too much bearish sentiment still because we still have 40% of the people that are bearish, and we now have 40% of the people that are bearish while we're in a bull trend. Bearish sentiment while we're in a bear trend is completely different than bearish sentiment while we're in a bull trend because this is going to increase the probabilities of very impulsive short squeezes. When you get people that are bearish, that means they're doubting the bull run, They're doubting the fact that we could go back into a sustainable bull trend, and they're going to continue to step in front of the freight train and try to short it, which means they're only going to throw fuel on the fire and only make this rally more impulsive. So you can clearly see there's just way too many bears and not nearly enough bulls to tell us that this rally is even close to over, and we still have 32% of the people that are neutral, which means there is still plenty of cash on the sidelines. When you get a strong bull trend with a lot of bearish or neutral sentiment, you are very likely going to continue that bull trend for some time longer until there's just way too much greed. So if we jump over to the fear and greed index, you can see that we're not even close to too much greed because we are still in fear and we haven't even reached the neutral reading. So this usually means there's still people fearful and they're still doubting this rally, and this rally more than likely will continue until we get way too greedy. And as you can tell, it does not look like we're at that point just yet, which means there could be plenty of fuel left in this bull run. On the NDX weekly chart, you could see the NDX did close at a new weekly high, and we did break out of the upward trending channel, so this momentum in this bull run is only picking up. We also closed above the weekly 20 simple moving average on the NDX, so we now have higher lows and higher highs and a weekly candle breakout on closing prices. Just as I said the tech sector is going to lead the way in this bull run, we are clearly seeing that because the NDX does represent the tech sector. So the next resistance we need to break, where we close right at resistance, is going to be at 12,948, and we will want to see a decisive break of that level. And as you can tell in the NDX downtrending channel, the breakout of the upper trend line resistance level will be right around 13,400, which will require us to also break our horizontal resistance level of 13,307. So while we don't have all of the bullish breakouts, we are definitely seeing the very early stages of a very strong bull run. And as I showed you with the sentiment, there is still a lot of bears doubting this rally. So I do believe we are going to see the bull breakout that is going to send the SPX also into its breakout. And this bull trend is only going to gain more legs as we continue to run higher. So you can clearly see the uptrend is steepening because we did break out of the upward trending trend line, and we are clearly heading to the upper resistance trend line in the NDX to test the next critical resistance. In the NDX, you'll usually get a little steeper pullback, so we could see anywhere between 5 to 6%. But again, I do believe those are buying opportunities as long as we're above critical support. And you do have a risk level right here to use right around 12,700, or the previous high down here right around 12,120. Keep in mind, as long as we're above all of these critical support levels, we are still making higher lows and higher highs, and we are still in a bull trend. So while I do say we are in a bull trend, that does not guarantee that we just have to go up in a straight line forever. There are always going to be ebbs and flows and dips and highs, and you just have to ride the wave and understand the bigger picture. On the Dow Jones weekly chart, we also got the weekly close above the 20 simple moving average, and we are sitting right at a critical resistance level right around 33,000 and 33,272. So we don't necessarily have a bullish breakout in the Dow Jones just yet, but we do have higher lows and higher highs, and we are developing a bull trend. Now, the thing in the Dow Jones is that we never did fill this gap at 28,500, but remember, there is never a guarantee that gaps have to get filled, but that could be telling us that this bear market is not quite over, and after this bull run, we could still finish out this bear market and make another leg lower. So do keep in mind, I am not trying to say that the bear market is over and there is no way we are going to new lows. I am simply telling you that while we are in a bull trend, it is much better to ride the wave than it is to bet against it. Let's just say this bull run continues to go on and we get all of the bullish breakouts and we continue to break out, and eventually the news gets a lot better and then we start forming new all-time highs. You are going to be very upset with yourself if you short that entire rally. So wait for a major breakdown in these charts before you start getting bearish, because in the short term we are in a bull trend, and in the short term that bull trend can gain legs and traction and continue to go higher, and you do not want to stay bearish while you are in a bull trend. If we lose the bull trend, we lose critical support and we start heading lower, we can instantly get more bearish because we are traders and we are not locked into anything that we are doing. We know our risk and we're going to trade accordingly. On the Russell 2000 weekly chart, you can see that we also did get the bullish breakout above the downtrending resistance trend line and the 20 simple moving average, and we're testing the next critical resistance right there at 1889. If we break 1889, this is definitely going to look like a very impulsive bullish breakout. So that is by far the most critical resistance in the Russell 2000. And you can clearly see in the Russell 2000, we did hit the weekly 200 simple moving average, and we are now trading above it yet again. So the Russell 2000 is another sector that could lead the way, the first to enter the bear market, and more than likely the first to hit the bottom and rally out of it. So Russell 2000 over 1889 will be incredibly bullish, so do watch that signal for the stock market as a whole. On the VIX weekly chart, you can see the VIX is continuing to get crushed, but we are sitting at a very important level of interest, which is the higher lows support trend line that we have been forming in the VIX. And I do want to see that level breaking down and the VIX coming back down below 20, and that should confirm this is going to be a sustainable bull rally. If at any point the VIX spikes off this support, that is completely fine for the bull run as long as the VIX stays below 24, because if the VIX starts getting too elevated, that is more than likely hand in hand with another panic selling that's going to continue the bear market. But while the VIX is below 24, I do think it's better to be bullish because we have the bull trend and we are seeing fear leaving the market, and the next signal to go full bull will be the VIX closing below 20. On Bitcoin, we're currently trading right around 24,000, and Bitcoin is getting back over that 200 weekly simple moving average, and we did see Bitcoin closing above the downtrending resistance trendline, which means Bitcoin is more than likely heading back up to 30,000, which is going to be the next critical resistance. If Bitcoin gets rejected at 30,000, we could continue into this wedge and come back down to the support level at 19,000. But for the time being, it does look like Bitcoin is getting higher lows and higher highs, which is going to be the early stages of a bull market, with the next bullish breakout being the breakout above $30,000 to start back into a bull trend. If at any point Bitcoin loses 19,000, it is more than likely trending down towards 12,000. But for the time being, while Bitcoin is above 22,000, I think you need to stay bullish. On the ARKK ETF, we are still below the support trend line, so we are still in the bear market, and we are still below that critical resistance at $48, and we are still below the resistance trend line. For the time being, you have to stay bearish on ARKK until it can start getting weekly closes above 48, and then I do believe the bear market is over. The bear market is not over until we see that price action, so do not get bullish on the ARKK ETF until it starts closing above 48. So jumping back over to the S&P 500, this is a very bullish week of price action, so do not ignore the fact that SPX is trading above 40.40, and that is going to be a very critical support level that you can also use to define your risk. I do not suggest shorting this rally. If you are bearish and you want to short, just wait for the rejection at resistance and a break of support. Losing the bull trend is going to be a much smoother ride for shorting this market. Nobody knows how high this can go, and I do believe it is at least going to go to 4,200. So I do believe we are going to break this resistance level and get a very bullish looking chart. I could be completely wrong, and that is why I follow price action, because remember, the stock market does not care what I think, and the stock market does not care what you think. Follow the trend and follow the price action and build a trade plan around any scenario that can come from the price action. Whether we get rejected from resistance or slice right through it, I can assure you, you're going to need to know exactly how you are going to trade this market, because if you only plan on the market moving in one direction, you are never going to be a disciplined and profitable trader. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.